Welcome everybody to The Break with PIA. This is our new video feature. It's going to be a distillation of the day's news. For the foreseeable future, we're going to be talking about coronavirus related news. Hopefully after this whole mess passes, we can talk about some regular insurance, but COVID for right now. My name is Brad Lachut. I am the Director of Government and Industry Affairs for PI Northeast. This is my colleague, Claire.
Hi, I'm Clare Irvine. I'm the Government Affairs Counsel for PI Northeast.
And today we are going to be discussing the federal stimulus package, which was just passed by Congress last week and signed by the President. So Claire, let's do this thing.
Yeah, so today we're just going to talk about the federal stimulus and specifically the parts that impact small businesses and their employees. So as a quick overview, we'll be talking about the Paycheck Protection Program for small businesses. That's the program that will be providing loans that can then be forgiven to small businesses for maintaining current employment. There's also a payroll tax deferment clause that gives more capital, more funds for businesses in the short term. And for businesses that weren't able to retain their employment, the federal stimulus package includes expanded unemployment options to try to build on what states already have. So the purpose of this video is we're going to be talking about what you need to know, and that's covered by the PowerPoint. And then at the end, we'll have a discussion that kind of gives more of the backstory and analysis on how this stimulus package compares to other things the federal government's been doing. So if you want to just cut off the discussion, you won't miss any essential details.
But definitely don't cut off the discussion, by the way. You definitely want to hear us talk about it.
Yes. We'll say, if you cut off the discussion, we'll say it was entirely to do for time purposes. But so just as a quick overview, the federal stimulus package, which official name is the Coronavirus Aid, Recovery, and Economic Security Act, or the CARES Act, includes a number of stipulations to try to put as much money in people and businesses' pockets as possible in the next couple months. So probably the most famous clause is the $1,200 that will be going to most American taxpayers. Any taxpayers on their most recent tax filing, whether it was 2018 or 2019, will be sent a $1,200 check from the U.S. Treasury. They don't have to apply, you don't have to fill out taxes, you will be sent a check. Or direct deposit if you've already established that. You also receive an additional $500 for each child. And the $1,200 is $2,400 for joint filings of up to $150,000. It does start to phase out for the people who are earning between $75,000 and $100,000. And once you hit $100,000 or $200,000 for joint filings, then you will not be receiving a check from the government. In addition to the checks being given to many American taxpayers, the stimulus packet, the CARES Act allocates $500 billion in stimulus funds, part grants, part loans for large corporations, as well as those necessary for national security, which is primarily Boeing, which was already facing difficulties before the coronavirus crisis. It also includes funds for financial support for the healthcare system, financial support for municipalities and localities. Then what we'll be talking about today, the Paycheck Protection Program to support small businesses, as well as temporary federal unemployment benefits. And so both these programs we'll be talking about are only for the course of the pandemic. These aren't long-term changes to the Small Business Association program, Small Business Administration. So the Small Business Paycheck Protection Program is a loan that small businesses can apply for to cover fixed costs during the coronavirus pandemic. It's calculated based on the business's payroll. For businesses that have fairly steady employment year round, it's calculated based on last year's employment, divided out that in a way that comes out to about 2.5 months of payroll costs, including health benefits, with a maximum annual salary for each employee of $100,000. So that's prorated for the 2.5 months. The loan is eligible for the covered period from February 15th, 2020 through June 30th. Small businesses don't have to give a personal guarantee, they don't have to give collateral, and any recent efforts to obtain lines of credit are not being considered. So a business doesn't have to have exhausted every possible line of credit in order to apply for this, nor will they be discredited for any any declinations from applying for credit. So it's pretty much any business who needs extra funds to cover their costs in the next couple of months will be eligible to apply for this. The eligibility requirements are the same as pretty much most SBA requirements with some expansions. It's any business with fewer than 500 employees across all their physical locations, 501c19 veterans organizations that would normally meet the SBA requirements, 501c3 nonprofits with fewer than 500 employees, other organizations and tribal business concerns that would normally meet the SBA small business requirements. It does exclude government entities. However, it includes sole proprietorships and independent contractors. So people who are self-employed who have fixed costs as well to deal with can apply. And there's a method based on their previous IRS filings to obtain that loan. For seasonal employers, they can also obtain this by using their payroll for the period last year, starting from either February 15th or March 1st to calculate their payroll costs. So seasonal employers are also eligible, even though how this impacts them would be different than other businesses. And so here's the key. It's called a loan up front, but the loan will be mostly, if not completely forgiven, if the business maintains employment numbers for the whole entire covered period or rehires employees upon reopening or resuming full business operations at the same salary, same wages. And so that the covered period is through June 30th. Expenses that transfer to the expenses that would be forgiven include payroll expenses, and that includes health insurance benefits. And for insurance agencies, that also includes commission payments. It also includes additional wages for tipped employees, recognizing that employees who mostly are paid from tips might have different needs than a salaried employee. It also includes rent, interest on mortgage payments, utilities, and interest on debts from prior to the covered period, starting February 15th, 2020. So those are most fixed business expenses that, with the goal of trying to keep as many people on payrolls as possible through June 30th. The forgiven amount cannot exceed the original loan. And then there's a reduction in how much will be forgiven if employee income is cut 25% or more, or you reduce employment. That doesn't mean it just reduces the amount of the loan that's forgiven. It doesn't require an if either or. Part of the loan can be forgiven even if you have to make certain business adjustments. You will still not have to repay the whole loan. The interest, though, does not get forgiven, regardless of what the employer does. However, the bill does state that the interest may not exceed 4%. And so what I've been seeing is that the interest will be 3.25% for most businesses and 2.75% for nonprofits. The program will be overseen by the Small Business Administration, with loans being distributed through local FDIC insured bank branches. The U.S. Treasury Secretary Steven Mnuchin expects that FDIC institutions will be able to start distributing funds on Friday, April 3rd. So that's this coming Friday, and we're still waiting to see information, but they're working on a very quick turnaround on this. So to also try to increase, recognizing that businesses really need money in their pockets now and capital to spend for these costs, the CARES Act also included a payroll tax deferment, where small businesses may defer up to 50% of payroll taxes for 2020. The repayment would be split between their 2021 and 2022 taxes. And this is on top of 2019 tax returns not need to be filed till July 15th, 2020. And then finally, there's the expanded unemployment benefits. This is normally unemployment is done through states. However, this creates a temporary federal unemployment program that will give unemployed workers up to $600 a week for 39 weeks. And this is to supplement their existing state unemployment. So unemployed workers, anyone who filed for unemployment last week will be eligible for their state benefits of up to the amount of time for the state and those limits, and then also the federal benefits. Also crucially for this is that sole proprietorships, independent contractors, and furloughed employees are are eligible. And this is crucial, gig economy workers are also eligible. Normally, these workers would have limited, if any, options under the state benefit system. So this gives them access to unemployment benefits that they may not otherwise receive. Similarly, furloughed employees who remain employed but don't actually work any hours will be eligible. So with businesses such as major department stores, furloughing employees where they're continuing to be employed but not working can now apply for the federal unemployment benefits and then resume work once the stores start reopening. The additional benefits will also be distributed through the state unemployment offices, and there's no requirement for beneficiaries to actively seek employment. Similarly, the SBA's loan program is building on the current way the SBA loans businesses money. They're not creating a new infrastructure, they're just creating a new program and using the existing programs and systems to distribute funds they already have. So that really reduces the amount of time it takes to get these programs up and running, with hopes of trying to get people these checks and these loans as quick as possible. And now that we've given the overview of how these Paycheck Protection Program, the payroll deferment, and the expanded federal unemployment benefits, we'll now have time for a bit of a discussion on kind of more of the backstory and now in the weeds stuff.
Time to get nerdy.
Yes, exactly.
So on the backstory, let's start with the legislative process here and how we actually got to the stimulus package that we have today. Because as far as, I guess, the government's concerned, federal or otherwise, this moved pretty quickly. As you might expect from when you're responding to a pandemic event, something you need quick response. So Claire, if you don't quickly just go through the process this went through to get where we are now.
Yeah, sure. So first of all, this is actually the third coronavirus aid package, but it's by far the biggest at $2.2 trillion. There's never been a stimulus package this big. For comparison, the combination of TARP and the bank bailout in 2008 and 2009 were combined $1.5 trillion. And the fact this came together in 2 weeks, typically the House of Representatives has to be passing the bill. So they passed the bill that the Senate with the White House then led the negotiations with Democrats at the table. It was bipartisan all the way. A couple of senators raised a couple of concerns, primarily about the amount people would be receiving an unemployment benefit. They argued that people would be laid off solely because they could get more on unemployment. You can't access unemployment though if you leave your job. You have to actually be terminated or laid off. You have to be laid off for something like all the restaurants being mandatory to be closed by governors.
Yeah, and that point, it's interesting because there are these senators that objected to the $600 on unemployment that's in addition to whatever they might get through the state. Traditionally, economists have generally agree that an unemployment system that pays more than employment does is not a very good system. So I think that was their argument here. However, I think their argument exists in a vacuum in what we traditionally think of in a well-working, well-oiled economy. This obviously was not that case with this pandemic going on. You had people who are unemployed who literally can't get other work because businesses are being shut down. So I think that mitigates it. And perhaps, the argument is a correct one. It wasn't correct for this particular situation. Yes,
and because they raised the arguments, but ultimately all the senators who showed up to vote voted to pass the stimulus. It was an overwhelming 96-0 vote. So it's not just it was bipartisan; it was everyone agreed in the Senate on the stimulus. And by that, all of the key players in both houses of Congress and the White House were involved in the negotiation. So the House has kind of assumed that they would be able to just do a voice vote without requiring 435 people to show up in Washington. And I think Brad, you wanted to explain what happened?
This is literally my favorite part of this whole thing. I know getting money in the mail from the government is awesome, but this I love. This just really scratches like the nerdy itch of like obscure constitutionalism. So the backstory in this is there's a representative from Kentucky, Representative Massey, who's been nicknamed Mr. No, by the way, before any of this happened. So just go into the story knowing his name is Mr. No. He objected to the stimulus package on two grounds. One, he thought it was too generous. Fine, whatever you think about that. you think about that. The other point he brought up was a constitutional argument. He argued that this bill was unconstitutional under the origination clause of the Constitution. Now, I know you guys, everybody knows what the origination clause of the Constitution is, but I will enlighten just in case. The origination clause of the Constitution states that legislation having to do with currency or taxation, finances, that sort of thing, has to come from the House of Representatives. It cannot come from the Senate. So he argued that that was not the case here because the bill came from the Senate over to the House. Now, he's a little misguided in this, in that the bill actually did start in the House, albeit not the stimulus package. The bill number did originate in the House. They passed a tax bill over the Senate. The Senate then gutted it totally, every single thing except for the bill number, put in their own stimulus package and then sent it back to the House. So in that regard, it is a completely new and original bill, but technically it still has the original House number and did originate in the House. So it's a little bit of a gray constitutional area. But so Massey, in his objection, wanted to basically bring everybody in for a vote. Originally, they were going to have a voice vote, which might make sense in this time of social distancing. Don't call in, 435 people from around the country and have them vote on a stimulus package that isn't get passed. Massey, giving his constitutional objections, required everybody to come in for a voice vote to get a quorum. So I think they had about half of the House of Representative members in for the vote. They set up special voting procedures to make sure nobody was, in risk of contamination, and it did pass over his constitutional objections. But I don't think it won him any friends in the Republican Party or the Democratic Party. So good luck to that guy. I appreciate his constitutional stance, but maybe pick a different battle at a different time.
Yeah, or make the point, but still don't try to actually block it. Just make the constitutional point for the sake of it, and don't make over half the House of Representatives show up in Washington D.C. solely to block it.
Amazing.
But it was very awkward. It was not only did the stimulus unite both parties, it was also his actions very much united most people, most of Congress.
So that's a little bit back. Why don't we discuss a little bit of the other efforts that the federal government has gone through so far? Because you mentioned this is the third stimulus package. So let's talk about what's happened so far briefly.
Yeah, so the first one was quick, providing some aid. The second one kind of sent waves through the benefits, or at least employee benefits, because it provided the first federal paid sick leave program. And it's a temporary federal paid sick leave program only for 2020, but it allows, it requires employers continue to pay people who are required to be quarantined for 14 days or up to 14 days due to the coronavirus, as well as requiring employers to pay most of an employee's salary for providing childcare where there is no other childcare. Schools, of course, are across the country are closed, requiring parents to kind of pull double duty of working while being their kid's teacher. I'm sure as many of you are well aware of. So that is funded by a tax credit on the payroll taxes. So it kind of requires employers to pay out of pocket and get a refund. The point of the third stimulus is to do the opposite, to give employers money now to pay costs, recognizing that those are necessary very quickly. And we'll be putting out more. We have information about the paid sick leave program, and we'll put out more information. It's designed to be the first paid government paid program or paid leave that employees should be taking. So if they have accumulated paid sick leave that's already provided, this preempts that, as opposed, and employees aren't required to use that. So if they have 2 weeks of paid sick leave already, and then they are required to be under quarantine, they could theoretically take 4 weeks off, all paid, thanks to this program. It's similarly to protect people's vacation time and personal time, because they'll probably want that going forward. They'll want that in September.
And we've gotten a lot of questions on both the federal sick leave as well as what various states have been doing on this. So we're going to have another version of the break where we tackle that specifically.
Yeah, we'll get into more detail to that. There's some other small things the federal government's been doing. One of the big one I guess that will actually probably affect people's lives in the fall will be that they postponed the real ID requirement to fly through TSA. So people have an extra year to get the driver's license with a little star on it, proving that allowing you to use your driver's license as government ID when flying within the United States. So it's a small one, but it's also it gives everyone an extra year to get that driver's license. And both leaders of both parties have indicated that there's going to be more stimulus packages coming along, or at the very least government response. They're saying either this isn't enough to really address the problems of Americans, or it's only going to address the problems in the next couple of months, because we really won't have an idea of how deep this pandemic has affected the economy long term until the economy kind of starts up again. With everything shut down, you can't really tell what the long-term effects will be, other than probably pretty bad.
Speaking of when the economy is going to restart, there's a bit of maybe not controversy, but a little bit of question of when that actually is going to happen.
Yeah.
Right? Some said Easter, some said who knows, right?
Yeah, well, it's one of those things where we're in a situation where there's not really good options, because having everyone stay home, having schools closed, those are really bad for the economy. But it's also evidence is showing it's good for it's pretty much the only way we have to try and slow the spread, flatten the curve, all the phrases that have been thrown around constantly at the moment. So while the CDC has recently extended their guidelines for social distancing through the end of April, and that's more recent than the president calling for everything to be open by Easter. And even if the president wants to do that, he wasn't the one to shut the economy down, shut businesses down. Those have been coming from state governments. So the governors of New York, New Jersey, and Connecticut joined together to close eat-in service at restaurants and bars. They all closed non-essential businesses around the same time. Other states have done similar things, and those are governors from both parties. It's a nonpartisan issue, and so really the economy won't start up again until the governors say so. They have been following the guidance from the CDC, but ultimately that decision is being made by state governors across the country.
Well, let's finish up this discussion with a little bit of a comparison, I guess, between the stimulus package we have now, the CARES Act, and I guess the most famous stimulus package up until this point, which is the TARP in 2008, the bailout of Too Big to Fail, some people might remember it as.
Yeah. Well, beyond, I think the CARES Act got a much better acronym than TARP.
Absolutely. I want to talk about that for just a second, the CARES Act. I want to know whose job it is to create these titles. Like this one's pretty easy, I think. Corona aid, all right. I'm thinking about the governor of New York, Cuomo's Pause Act. I'm thinking they must have spent more time trying to figure out the letters and the words to go into Pause Act than they did actually writing the act itself. That whole process just fascinates me.
Yeah, I'm going to guess with the governor's office, it's one of the people who would normally be working on insurance legislation that has suddenly been put on pause,
right?
And they're trying to figure out how to keep themselves busy working from home. They made an assignment for their current homeschools.
Right, exactly. They've got their kids working on this child labor, right? Love it.
Teaching them civics, most important part. But to kind of get into more of the details, is one thing, the economic threat in the situations is very different. For TARP was responding to kind of a collapse, whereas the CARES is trying to hold off a complete it's trying to slow the collapse. It's one of those, it's in response to basically having to shut down large sectors of the economy to try to stop a global health crisis, or at least slow global health crisis. Whereas with TARP, we've kind of created it was a subprime mortgage crisis. The crisis was economic. And so with TARP, you kind of knew they knew what they were doing. They knew what the situation was. And with CARES, they know what people need in the short term. But as I said, once things start opening up, we'll get a better idea of exactly how bad this is. And similarly, like in the last week, there was exponentially higher number of people filing for unemployment than any week during the 2008-2009 financial crisis, because in 2008-2009, it was only really the finance industry that had the sudden shock. The rest of the economy kind of felt the impact over a number of years as several years as unemployment got higher and higher. Whereas with this, the governors of three of the tri-state area, New York, New Jersey, and Connecticut, pretty much shut down the restaurant industry, most of the restaurant industry in a couple hours. There was virtually no warning that they were shutting down eat-in services. And by the end of that week, they'd order 100% of non-essential employees to have to work remotely. So that, of course, led to astronomical high number of people filing for unemployment from the restaurant sector, from the theater, from art, from hotels, out just across the economy. And that just, you didn't have that suddenness in those type of at that scale in 2008, 2009. However, a similar is how these stimulus packages are built, is that while part of it is to, CARES goes a lot further in helping in sending people money directly. Instead of sending people like $250, they're sending $1,200, which is substantially more than being able to pay your bills. But they both, when it comes to how they bail out businesses, is a good chunk of it is by loans, particularly for large businesses. So while it looks like $500 billion is going to bail out large corporations, a large portion of that are loans the federal government will actually get back. And similarly under TARP, a large portion of what the money they used to bail out various industries, primarily the auto industry, were actually loans. And so they got it back plus interest. So while it looks like while it is a massive number, and the federal government will be paying a massive amount to try and prop up the economy in the next couple months, they will get some of that money back, even if they are forgiving most of these small business Paycheck Protection Program loans. It's where they loan the money to major business, the massive corporations, that they'll hopefully be saving those businesses and then getting the returns.
Yeah, it's interesting you're talking about putting money in the hands of taxpayers and small businesses. We're obviously getting closer to April 1st. And that is the day that a lot of bills are due, right? Everybody's rent or mortgage or electric bill or whatever it happens to be. So you're coming up to a first big bill deadline for a lot of people who may not have been working for a couple of weeks. So getting this money in people's hands quicker than not is good, although it's certainly not going to happen in 2 days. For frame of reference, the last time there was a bigger stimulus package like this, I think it was about 2 or 3 months between the signing of the bill and when the checks were actually in people's hands. Yeah. Although that said, I think those who have direct deposit with the IRS already set up should get their funds more quickly.
Well, so kind of address that. States were when states started shutting down businesses and requiring employees to go home, they also suspended the wait periods for unemployment benefits. Mm-hmm. So most of the states, people are now actually collecting their unemployment benefits because they didn't have to wait anymore. So that's also why there was so many people applied almost immediately, because the states set up the system to allow that, to try and get people the money before the end of the month.
Well, I think we could probably keep talking about this for half an hour, but I realize the point of this is supposed to be short. So I think we'll probably end the discussion here, and hopefully people have gotten something out of it. This certainly will not be our last The Break. We will have some shows planned, segments planned, whatever this actually is, on what the state governments are doing. Obviously, this one was focusing on federal government. We'll talk about what states are doing, including executive orders, how those are impacting businesses, what businesses can actually remain open, that sort of thing. Certainly, we're going to talk about the SBA and other loan projects or plans to help agencies and clients get back on their feet after this. Also, we're going to discuss some of the insurance-related issues, specific insurance-related issues, business interruption, how that responds in a crisis like this, what coverage might be out there or might not be out there, and then some new things that have kind of popped up in terms of importance, cybersecurity and coverage, and hired and unknown coverage as well. But certainly, if anybody watching this has any ideas or has any questions, please reach out to us. Let us know what you think, what you want us to talk about, what sort of questions you might have on anything, and we'll have a special show just to address questions as well.
Yeah. So our emails are on the screen, and also with this video, there'll be a link, post of additional resources, including a breakdown in all the funds being distributed by the stimulus package and various resources for people in states. People in each state that states have in addition to the federal program.
And certainly I would encourage everybody to go to the PIA page to check out our resources, because we have a lot of them and they're being added on a daily, if not hourly basis. So please, keep up to date there, because things are changing.
Great.
All right, well, thank you, Claire. I really appreciate you explaining the federal stimulus package to us. I think that was very helpful. Hopefully people will come away more informed than not, and maybe we're even interested by our kind of nerdy conversation about constitutional law. All right, thank you, everybody.
Thanks for listening, everyone.
Yes, thank you, and hopefully we'll see everybody soon.